First of all, let's try to cover the primary source of income, which is the father, and how we will. So there are multiple ways we can get to an HLV number, which will give us the amount of cover that the term insurance should have. So when we look at, well, if you go to an insurance provider and ask what is the maximum eligibility of term cover we have, so they will give you either 10 to 20x of your annual income as term life insurance cover. So in this case, it comes around to be 2.4 crores. But again, understand that pure term insurance policy is a cost. If within the policy term, the insured, the primary, the father of the family dies, only then the family receives the money. Otherwise, the premium that the father was paying will be lost. And if let's say the policy will cover father at till the age of 60, and he survives till 60 and he becomes 61, all the premiums will be lost and the policy will expire without paying any benefit. So it's not always the best to have the highest amount of cover, but you should optimize it to the safest level. So we can have two ways of optimization. We'll say in first scenario, we'll say, what if we can replace the income? We will get enough money to replace the annual income of the father to the family. And if we can invest the money at 7% per annum, and we need to draw 12 lakh rupees out of this uh, corpus, so we can get it to 1.7 crores almost. If we get 1.7 crores tomorrow, we can deposit this and we can replace the father's income to the family of 12 lakh rupees per annum. Then we can further optimize it with the need-based HLV, need-based human life value method, which is cover your expenses. So we can take care of. So we need a corpus which takes care of the family's expenses that father was contributing to. And second is it also takes care of the important goals where father's income was going to. So, for example, children's fund and marriage goals, those things can may at present, if you have 50 lakh rupees, you can easily cover. So, if we add these two, we get 1.27 crores. So, this amount will be sufficient to take care of family expenses and take care of the future goals if anything happens to the father tomorrow. So you can go with either 1.7 crores or 1.27 crores. 1.27 crores is more optimized a cost. It does not make you spend too much on premium, but it provides adequate coverage to the family. If anything happens to you, your family is safe. If nothing happens to you, you don't end up spending too much money on insurance cover.